Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. And you know what? We've had a lot of good fun here on the show, talking about some income strategies, different strategies to build wealth. And time is that one thing you cannot get back. That's why it's so important when you have opportunities to do something a little bit different. You got to take them. You know, we've been doing some acronyms. You know, I talked about the JOB. That's just over broke. The real definition of being poor, it's actually not monetary, Al. It's actually passing over opportunities regularly, because that's what people do. People are naturally procrastinators. So that's why we have these investing classes. Hopefully we inspire you to actually take that first step, and I get it. Sometimes it's hard to take that first step to do something you haven't done before. But if you want different results, you got to do something a little bit different. So if you want to come see one of these investing classes about the concepts we're talking about here today, how to have income strategies on top of your job, different strategies to actually build wealth, you can just text the word investing to the number 210 for 2 seats for this class. You're going to get a text right back when you do that. It will say, "Welcome to Investing and Trading Live." There's one more step. You just got to click the link that we have in there for you. Pick your own date for the class. We do these during the week. We have these on the weekends. And by the way, these are 2-hour classes. It's a quick 2 hours, so anybody can manage to do 2 hours of their time. And we're nice and easy to find right off the highway here. So just text the word investing to the number 210. So Al, our theme here today has been a little bit about building wealth. Now, we talked about in the first and the second segment, it takes income to build wealth. Mm-hmm. But it's a certain type of income. It's extra income, because that income that from your JOB is going different places. Some is going to some bills. Some is going to fun. Hopefully you're saving a little bit, and then hopefully some of that savings is going into the market to invest for later, to be able to live those golden years at that time when you want to be able to retire. So you're not spending those golden years at the golden arches. So that being said, we want to get into some kind of shift gears into more protection mode in your wealth accounts, because a lot of people have retirement accounts, 401ks, they have IRAs, and the same concept or the same conditioning we were talking about in that last segment about people are told you can't do this, it's too complicated. And nothing against the people, but the brokers, the advisors, the money managers are out there. They will tell you, you can't do this, you shouldn't do that. Trust the advisors, trust the professionals. But if you think about that, if everybody is doing that, which a lot of people are, they're trusting somebody else to dictate their future, to help them retire. And if most people can't retire, most people don't have enough to retire, people are working much longer, 70, 60, 70, 80 even, years old, well, there's got to be some sort of disconnect there. So that being said, why not do this yourself? It's not rocket science. You just haven't been taught, but you have to get over that fear. Now, you help a lot of people get over the fear to manage their own accounts. And sometimes that sounds a little scary. So let's just say make their own choices in those retirement accounts to protect from loss in down markets, but also to continue to grow during up markets when things are looking good. How do you help people cross that barrier of fear to do that? But what are some of those techniques and strategies that you help people with to protect and grow their retirement accounts?
Well, first of all, think about this. If you work 30 or 40 years, you work hard and you're able to put some money away for retirement, and maybe it's grown over the years, you go into retirement, you cannot let that money leave you. It has to stay with you. You have to have it protected. And Wall Street, to be honest with you, is not doing a good job of showing you how to do that. Basically, what Wall Street is doing, you made a comment just a minute ago. You said that people are just kind of conditioned to trust an advisor. Mm-hmm. But what the advisor is saying is that you need to trust the market. If you just put money into the market and you hold on to it, you're going to be fine.
That's a good point.
Well, how has that worked out for people? It really has not worked out well.
Let's stop there for a second, because I want you to repeat that so our listeners really understand what you're saying. So it's not trust your advisor, it's trust the what?
Trust the market.
Can you trust the market? Because the market will do whatever it's going to do.
No, all you can do is trust your ability to take advantage of what the market is presenting. But to do that, you have to have the right education, the right knowledge.
What you're talking about there, what they're telling people to do is have a hope strategy.
Right. It's buy and hope, and it's a great business model for them. They will give you a choice of things that you can put into your retirement account, Basically, you're making the choice. You're still managing your own retirement accounts. You make that choice, and then just hold on to it. Don't worry about crashes or corrections. And then they'll go out and they'll find more people to bring their assets in so they can do the same thing. And without really doing anything or very little to help you manage those accounts. So there are things, in fact, I mention this all the time, that if we lined up 100 people and asked them to write down everything that's in their retirement account, 90 some of them would not be able to do that. And even if they did know the names of the mutual funds or the ETFs, they probably wouldn't know what they were invested in. So number one is understand what you have and what you have available to you. There's always going to be something, even with the limited choices you have in a 401k or 403b, that will be a better place for your money than someplace else. You can manage, you can move money around within those accounts, but you need to be able to know what they're doing, what those individual assets are covering, what part of the market, what part of the economy.
But why might you want to do that?
Well, because
different market conditions.
Because in different market conditions, different parts of the economy will do better. And think about it. A hedge fund is always what we call long short. So they are always doing something to make money, even if it means doing that on a down market, So if they're investing in some part of the market, say a certain sector of the economy, and it starts to roll over, they'll move that money somewhere else, and they'll create a bull market in another index in anher sector.
So what you're saying is the market doesn't just go up.
The market does not only just go up, it goes down a lot, and it goes sideways a lot. So most people are in a one-directional investment, and that means that the market or the asset has to go up in value for you to be able to make any money.
So what is your strategy in a down market then?
Well, there are a number of things that you can do in a down market, and we cover these in these classes. I'm going to just hit on one that I won't go into detail on, but you can come into these classes and we will, and that's shorting the market.
Okay.
Being able to take a short position, which you can't do in a 401k or an IRA, but you can do the equivalent by using a particular type of option. You can do the equivalent by using what we call an inverse exchange traded fund. There are about 3 or 4 different things you can do to benefit in a down market. When you think about it, if you're not, the market goes 3 different directions. If you're only benefiting in one, that's 1 out of 3 opportunities for you to be successful. The managers, the fund managers, the brokers, the brokerage firms, they're making money all 3 directions. Whether the market goes up, down, or sideways, they're taking a chunk of your funds to be paid for really doing very little or nothing for you. And, the sad thing, Josh, is that only about 30% of non-retirees feel confident that they're on track to be able to retire.
Yeah.
That means 70% of the people are not.
That was a study that just came out recently,
It was a study that came out on Market Watch, and I mean those are sobering numbers. But they also said that a lot of people back in 2021, when the market was going up, were starting to feel pretty good. And people just get very complacent, and they think that, well, it's going to go up. It's going to continue to go up. My broker said if I just hold on, it will keep going up. Then 2022
You know what will
came
keep
along.
going up is their fees.
They're always there.
Yeah.
Well, 2022 came along. We had a bear market in stocks and the worst bond market since the 1970s. So what typically was relied on, which was that 60-40 split, 60% stocks, 40% bonds, or when you go into retirement, flip that, 60% bonds, 40% stocks. That didn't work. It didn't make any difference if you were in bonds or stocks. You were in a bear market. And it wasn't just that the market was going down. It's that people were in the wrong assets. They didn't know how to take advantage of these different moves in the market. Regardless of what's happening, if we're in a bear market, there's always a bull market somewhere within that.
Exactly.
If we're in a bull market, there's always going to be a bear market somewhere. So there's always an opportunity for you to participate. It's just getting the knowledge, and we do it in a way where we keep it very simple, and it really gets down to only doing one thing. It's following what the people that are successful, that have billions or trillions of dollars, what they're doing, because they show us what they're doing on a price chart.
Yeah, being in a strategy that is beneficial or profitable in 1 out of 3 directions is like being a pitcher and having a fastball, and that's it. If you only have a fastball, you are not going to be in the major leagues. If you don't have a curve, if you don't have a slider or a changeup, you're still playing Little League, right? Well, actually, Little League people have more. You're in T-ball. because
Right.
it's a one way strategy. It's just one fastball. That's what buy and hold in the market is, and that's what brokers and advisors are putting people in. And a lot of that is to keep you in the market and collect those fees. Nothing against the people. They're great, probably great people, but the industry has really, in our opinion, really set people up to fail. So if you want to have your own choices, your own opportunities, benefit in the market in multiple directions, come see what these strategies are. Al was talking about shorting, which means profiting in down markets. That's the strategy. Text the word investing to the number 210 for 2 seats for this class. Local here. Text investing to the number 210. You'll get a text right back with a link so you can pick your own date during the week or the weekday, and also in the evenings. So coming up next, we got one more segment to go. Hopefully we've been inspiring you to do things differently. Let's continue that and continue talking about some income strategies and wealth strategies no matter which way this market goes. We'll be right back.